Nils from Tradias, Carmel from Grand Thornton, Hugo from Asset Reality, and Ari from TRM Labs. We're going to discuss today the state of the art in the fight against financial crime. And this is very digital asset related, right? It's a very, very hot topic. We're talking about what's the state of the art in criminal investigations, but also in civil investigations, all the way to asset seizures, custody, asset management, and liquidation. And it's a pleasure to have the leading players in the field, like literally the leading players in the field with me today on a global scale. Maybe a quick round of introductions first, and then we kick things off.
Yeah, thank you very much for having us. So my name is Nils. I'm Chief Growth Officer at Tradias. Tradias is a trading house, a German licensed, BaFin licensed bank. And our main business is servicing other banks that they can offer cryptocurrencies to their clients. So classic B2B2C model. But as a side business, we also help governments, states, and the public sector to sell or to liquidate crypto assets that they have seized from crime.
And there was a very famous case in the news about like 50,000 Bitcoin, right? This is the gentleman.
Yeah, and by the way, we did not move the market. I can explain that.
Yeah,
later.
this will be
there was
discussed.
Another reason for it.
This will be discussed as well, because this is a quite important topic. Carmel, please.
Thanks, Max. Yes, I'm Carmel King. I'm a partner and the digital asset recovery lead at Grant Thornton out of London. My work involves two things, really. One thing is litigation support, predominantly in the civil litigation sphere where there are hacks or thefts or frauds of some nature. We'll do the investigation and the underlying blockchain analytics reports that support lawyers in their applications for freezing, injunctions, disclosure and other reliefs. Then we'll come in at the end and we'll help with the enforcement through court-appointed statutory appointments. So I'm an insolvency practitioner. In the digital asset space, I've actually got a number of solvent liquidations. So unusually where there isn't a dispute or some kind of fraud, it's the orderly wind down of organizations. I'm appointed over Bittrex in Bermuda, a couple of the FTX companies outside of the US, and some others to do with MakerDAO. And that is about the orderly wind down, the return of assets to those who own them, and then the distribution to the ultimate shareholders. So mostly disputes, but also sometimes when things go right too.
Hugo?
Hello, everyone. I'm an investigator by background, so I spent most of the last kind of decades trying to find bad guys and trace their ill-gotten gains. What I do now is I focus exclusively on the seizure and the management, what happens after you found the assets. I work directly with law enforcement, but also court-appointed processes like insolvency practitioners like Carmel, and those clients effectively use our platform to seize assets, manage those assets, and eventually dispose of those assets. It's not just about seizure as well. It's also about some of the operational funds that some of the slightly more interesting use cases that government agencies have that they're leveraging crypto for. I'll be speaking mostly about crypto, but just so you know, we seize all assets, boats to bitcoins, monets to meme coins, absolutely everything.
Amazing. I'm Ari Redbord. I'm Global Head of Policy.
Wait, I don't think the micro is on. But I mean, everyone knows this guy, right? So,
There we go. I'm terrible with technology. I'm Ari Redbord. I'm the Global Head of Policy at TRM Labs. We are a blockchain intelligence company. I'm sure we will dig into that during the course of the conversation. Prior to joining TRM, I was a supermodel. Actually, no, that's Max's bio. I'm so sorry. I should do my bio. I was a federal prosecutor with the U.S. Department of Justice for about 11 years, always really working on that intersection of money laundering and national security, what I call threat finance, stopping bad guys from getting the money they need to do bad things. And then spent about 2 years at the U.S. Treasury Department overseeing the national security apparatus there. So OFAC, which is our sanctions regulator, FinCEN, which is our financial intelligence unit. And, thank you so much to Max, to Michelle, to Taxbit for having me here. Love our partnership and an opportunity to talk about what we do together.
Thank you very much. So maybe also to clarify, I think one of the questions I always get is, what does Taxbit do related to financial crime investigations, right? Because most people that thought about Taxbit really think about like our history as being like a retail crypto tax tool, doing tax calculations for end users, right? Help you file your tax reports. That's not what we are doing anymore. for quite a long time right now, but ultimately we closed the deal with the Internal Revenue Service in the United States over 4 years ago. And we have done a lot of audits, a lot of investigations, and really got more and more also on the financial crime investigation part, where it's really about also, tackling tax evasion and tax fraud, but ultimately truly accomplishing a follow the money approach. But basically, I will elaborate a bit more on that a bit later. So maybe kicking off things and really looking at how is the state of the art in fight against financial crime. It's really about, first of the question is, how are investigations even triggered, right? What are the key things that we see? And maybe we are starting back to my supermodel friend, Ari. How are investigations triggered at the moment? And honestly, what are the things that you see happening currently on chain?
Sure. I know this is a super sophisticated group when it comes to these issues, but just sort of level setting a bit, right? The promise of cryptocurrency is cross-border value transfer at the speed of the internet. We can now move funds faster across borders in larger amounts than we ever could before. That is super attractive to bad actors, right, who also want to move funds. But the promise is for remittances and payments and really all the things that this ecosystem allows. The difference, though, is we now have more visibility on those transactions than we ever did in the traditional world. When I was a prosecutor, I used to investigate cases involving networks of shell companies and hawalas and high-value art. There was no TRM to track and trace those things. So the way an investigation works in crypto is different than in the traditional world, in that we have visibility on all of these transactions, and oftentimes we have labeled addresses. So when an event occurs, law enforcement is able to use TRM to identify a wallet address, understand the attribution, right? Is that a terrorist financier? Is that a scammer? Is this potentially a tax evasion case? And ultimately allow that law enforcement entity to begin an investigation. But I think one thing that's really, really important, and I know my colleagues on the panel will build on this, is blockchain intelligence, blockchain analytics is not a silver bullet. It's just one tool that we have in a toolbox that investigators use. We're really good at tracing transactions on blockchains today, but the blockchain ultimately ends still today, and you have to transfer funds in the real world to use them. And it's really marrying what we do at TRM with the off-chain data in order to actually build an effective investigation.
And what are kind of like the trends you see? Like, what are criminals actively using? If you look, for example, at a Bybit hack that recently occurred, right? Is there any trends that you see overall?
Yeah, it's a great question. And like, I can sit here all day and talk about Bybit, and I promise you I won't. But one of the coolest things to see in that case is, and just to put it in perspective, right? We put out a report, I don't know, a few months ago that said last year North Korea stole about 800 million from the crypto ecosystem. 6 Fridays ago, they stole 1.5 billion in one day. And it's just absolutely extraordinary. It is the biggest bank robbery in human history, the biggest theft that has ever been committed in the world. I mean, it's really extraordinary. And what we've seen is, it's really cool. Like, every day I wake up in the morning and I see a transfer from the US to our team in Europe to Asia of folks tracking these funds. Bybit is a customer of TRM. The FBI is tracking this. We're tracking it. And it's really extraordinary investigation. They'll off-ramp a lot of these funds to use them. By no means all of them, but we'll kind of go from there. In terms of trends, North Korea converted the funds from Ethereum, which was stolen, to Bitcoin in absolutely record time. We've never seen $200, $300, $400 million move as quickly as it did in the first 24 hours of this hack, which to us means there's a lot more liquidity out there, and that North Korea, using Chinese money laundering networks, has gotten a lot better at laundering these types of funds. It doesn't mean that they're off-chain, to be clear, but it does mean that they've now, in Bitcoin, where they have a networks of mixers and other types of laundering typologies that they're sort of using. So I think the conversion of funds really, really quickly was astounding to even us who like live in this world. And now they're back to sort of using a lot of the mixing services and things that they've used. A lot of cross-chain transactions, moving funds in rapid succession across blockchains to launder. So those are just some of the things we've seen. Some are old, but I think if there's like one major takeaway in the first 24 hours or so, it is how fast they were able to move large amounts of funds, which we hadn't ever seen before.
I think the other thing that case really highlights is we might be very, very good at tracing and investigating, but we're really bad at recovering assets. I mean, you're getting the hourly updates. What is it up to now? It's single-digit percentages, effectively, that's been either seized or returned in some way, shape, or form. And that's part of the issue, is we spend so much time focusing on, look at this mountain of data. It's great. We can all look at it. We can start, splicing it in lots of different ways. And, I'm sure you'll be talking about that. But what's the ultimate end goal here? The ultimate end goal is making victims whole, or getting funds out of criminals' pockets. And I'm not going to say we've got the answer, because I don't think any of us do, but this panel, I think, is working really, really hard to try and make that asset recovery story a bit more successful. Practically speaking, how you end up doing that, I think, comes back down to the obvious public-private sector partnerships, which is all what we're trying to do with our respective government clients, especially.
Yes, so thank you very much. I mean, absolutely agree on the points. And Carmel, maybe from your side, also working from the civil side, what's you?
Yeah, I mean, not every case is as high profile and astonishing as Bybit. Every week I get 10, 20, 30 emails from people that have suffered from investment scams or hacks, and some of these can be...
And some of them are scams.
Some of them are... No, there are genuine losses, and obviously our work providers, it's a lot of the work that we do is investigating hacks and scams and all kinds of things like that, and sometimes it's many people. And because obviously this is a borderless sector, it's very, very hard on the civil side to get a group of people together, because they could be in any jurisdiction, and all a criminal needs to do is get $100,000, $200,000, $300,000 to render it very difficult. And I think we're all very familiar in this room with law enforcement assisting in the freezing anyway, if not hopefully the recovery of assets for victims of fraud in this space. But there are many jurisdictions where law enforcement is not up to speed. There are many jurisdictions where they don't have the funding or the training, and they're just not capable. They don't have the connections. Not everyone is IRSCI or the FBI, or, even in the UK, there are certain government organizations that are good, but there are some that wouldn't know what to do. And people are walking in off the street saying, I've lost my entire life savings. What are we going to do about it? And they say, I don't know, report it to Action Fraud, who, as anyone from the UK knows, is just a pit of despair. So the civil side, I'm not saying it's the answer, and it's certainly not the silver bullet, but it is the other side to things that offers capability. And particularly in common law jurisdictions, case law is very advanced. It can be very quick, it's very innovative, it's very victim focused, and it does move very quick. And it also, for a lot of people, particularly on the hacking side rather than the investment scam side where they don't have any other options, but where you do have a large company, the likes of Bybit, I know that they're pursuing civil remedies as well, because it allows them to control the pace and the jurisdictions. They're not asking law enforcement what's happening with that MLAT that's sitting on a desk in BVI or Seychelles or Cayman or Belize for 2 years. And I've had one that's out there for 2 years. So also done a lot on the criminal side. On the civil side, if a victim of crime is instructing a lawyer, who in turn is instructing us to produce a report using TRM and other products, to assist in proactively going to court, getting an urgent court date, which can be within a matter of hours. If you can, literally had a conversation yesterday about getting a court date in Hong Kong in a matter of hours, or having the actual hearing within hours. That's your freezing order within hours. That's you getting on to whether it is a token issuer, centralized exchange, or anyone that you can contact. Obviously, there are limits when it comes to DeFi and when it comes to smart contract operated services. But you can get those freezing orders in place. You can get them in place before you even go to court if you have the right connections. You say, we're going to do this freezer because an exchange, for example, does not want it to be known that they were put on notice of having channeled fraud, like deep proceeds of crime, and they didn't do anything about it, because then you've got some very deep pockets to go after for their negligent acts. So there are ways and means through the civil process to use court processes to freeze, to get disclosure, to try and find out who's behind the bad acting, to get disclosure of the internal ledgers, to find out where the assets went to and to trace them back into the real world if you haven't managed to freeze them, and also to get an order for the delivery up of those assets. We've had numerous successes. I say numerous, I mean, it's certainly not 100% of the time, but we've had several notable cases where we have managed to use civil processes to freeze assets and to arrange for the return of those assets to really vulnerable victims of crime at terrible times in their lives. And we've been able to do it fast.
Super interesting. I mean, two things that I want to point out here is probably like, especially if we look at the global scale of the state of the art in the fight against financial crime, I think what has become very clear already is that there's different levels of sophistication amongst all agencies, right? And since crypto is a borderless phenomenon, we see also criminals taking advantage of those loopholes or those jurisdictions with less sophisticated investigation bodies. So also another point that Carmel highlighted, besides of like the big need for a close public-private sector partnership in this regard, because this is actually what it's all about. And it's also about like getting the help with all the players, right? With Bybit, with Binance. We had KuCoin that immediately jumped in after the Bybit hack. So there's a lot of players that actually also from the private sector need to collaborate in order to stop things from happening. Is that we see that there is also a budget question, right? In a lot of countries, the question is how much budget is actually available to work on these cases. And I mean, there's different priorities, right? It's different priorities across state. We see that crypto is still a side thing. It's like it's a niche. Ultimately, it's still regarded as a niche.
There can be a bit of an attitude that crypto equals fraud, and if you're dabbling in it, then you deserve all you get, right? It's not. It's completely without foundation, but there is an attitude.
Exactly, and that's what we are seeing. I mean, and cases like Bybit don't help in the public perception. But then maybe like coming from the investigation side, also maybe what we are working on, seeing that in public, like in the actual investigation flow, is that historically a lot of the investigation authorities, talking mostly about CI and law enforcement bodies, have used on-chain analytic tools like TRM to actually investigate on-chain behavior, right? But then at a certain stage in investigations, what we mostly see is that a certain transaction ends at an exchange. So we have an incoming flow to let's say Bybit, to Binance, etc. And then there's transactions happening within this platform, and it's very, very hard for an investigation authority to actually follow the money, right? Because they then subpoena data from these exchanges. They receive bulk data sets, CSVs or Excel sheets that contain hundreds of thousands of rows and often like 8 sub-pages. So it's really, really hard to actually follow that lead. Because right now there's quite a lot of actually like a lot of investigation authorities, I would say, like on the grand scheme of things, it's not a lot, but it's a portion that is significant. A lot of them can already use on-chain analytics, right? But the question then comes how to merge on and off-chain data. And this is what we at Taxbit have really focused on, is actually help them to then ingest data from the off-chain side, build a flow of money, identify new unmatched transactions that then would maybe potentially require additional on-chain analytics. And we are talking about puzzling, right? Getting the complete puzzle together and actually get a holistic data set.
So you said it's a question of budget. That's right. But the governments now understand that it's also a business model.
Exactly.
When we train our police, and if you are not searching for crypto, you can't find crypto, right? But if everyone knows what he has to search for, and when he is trained, it's definitely a business case, because you find millions and millions and even billions. So it makes sense for them to really take care about that topic. And we see that at least in the last, let's say, 12 to 18 months, that there is a huge change in that from the view of the governments on that topic.
Exactly. And this brings me to the case. If you have a complete data set, you can follow the money, right? You see how much money was made. And this brings me also to CARF, the crypto asset reporting framework that each and every one of us loves, that introduces comprehensive information reporting requirements for service providers. So tax administrations will be provided with huge data amounts about off-chain transactions, so basically transaction ledgers of exchanges, and can based on this information, then can also initiate investigations about individuals. So this can be used, of course, for tax purposes. And as we know, the number one case for asset seizures in the traditional finance space is tax, right? And so handing over to Hugo, Also looking at the state of the art in asset seizures. I know it's a very, very hot topic, right? At the UNODC meeting, we had a huge discussion about what's the state of the art in asset seizures. So maybe you can tell us a bit more about that.
Yeah, and to this, I kind of almost have to thank President Donald Trump's executive order a couple of weeks, because he put seized assets and forfeited assets specifically on the map for many people who frankly had never heard of that. I mean, who in this room, put your hands up, had ever heard of the term forfeited assets before in an asset recovery setting? Okay, so a few of you, about half. Now, I can guarantee you that everyone in crypto knows today what forfeited assets are, because suddenly you've got President Donald Trump saying there'll be a Bitcoin strategic reserve and a digital asset stockpile, which will be funded mostly from forfeited assets. So if we take a little bit of a step back, you've done your kind of holistic investigation, you've married up blockchain data with off-chain data that's happening on the exchanges, but also you've done your digital forensics, your internet infrastructure research, your open source research analysis, all of your public records. You've married it all up. That becomes your kind of the basis for your investigation. You've then thought about your asset recovery strategy, civil, criminal, jurisdictions, all that kind of work. And congratulations, you're getting all the right kind of disclosure information, and you've finally got some assets to seize. We can talk about the state of the art, but really I think it comes down to three fundamental challenges that you have with seizure. And those are speed, coverage, and security. And they affect everyone, whether you're in law enforcement or you're a civil asset recovery practitioner. So picture this. Let's start with speed. Picture this. It's 2 a.m. on a Sunday morning, and you're executing a search and seizure order.
That's a real case.
It's always a real case, yeah. And the good news is in the UK, actually, you can do that civilly, which is great. So you don't need law enforcement to break a door down. You still need
a court order, though. Yeah, I need
court order, obviously. It's 2 a.m. on Sunday morning. You're walking in, and you see your bad guy running out the back door, and you start rummaging around the house, and you look behind a painting, and you see 24 words. Fantastic, you found a seed phrase. But the guy's running behind. He's running, he's calling his friends, he's saying, move the bloody assets, move the assets now. You, at that point, need to be able to react. What we've seen, unfortunately, historically, with a lot of kind of seizure situations, is someone will take that piece of paper and will say, fantastic, I have seized control of the asset. In the evidence bag it goes, back to the police station, and guess what? A couple of hours that took, all of the assets have gone, all of the assets have moved, and you're back to doing your tracing investigation. Coverage is the other kind of main challenge that you see with seizures. You don't really know what you're going to seize until you seize it. You might have done your pre-seizure planning. You might know that there should be a Ferrari in the driveway. You know there's a house that you're going to, and you know they should have some Bitcoin, but you turn up and they've got Taxbit 2.0 meme coin and a quite a large chunky position of it, and you need to be able to seize that at that point. Try calling exchange up and saying, hey, we know you don't support that asset, but could you just do this as a one-off for us? They're not going to do it. And that's part of the problem with effectively the seized asset landscape having to rely on infrastructure that is built for retail and institutional clients. Security, and then I'll stop, Max. The biggest challenge is self-custody when it comes to seizures. What a lot of law enforcement professionals have to do today is, if they're about to seize an asset, they've only got one of two options. Either they go on Amazon and they buy themselves a ledger wallet or an equivalent kind of hardware or software wallet, or they go to an exchange and create an account, usually under their own name that's got nothing to do with their agency, and they try and leverage that existing infrastructure to do their seizure. You can just imagine the security nightmare and the processes and all the rules that are being broken, but they're doing the right thing because they're just trying to take control of the asset. What they're missing, though, is this broader idea of a seized asset management infrastructure. So when we talk about the state of the art, I think let's start with addressing those three challenges. First, security, coverage, and speed. And then you can start looking at really funky stuff like weaponizing smart contracts for seizures, which we've started doing. Criminals are using smart contracts to drain your wallet. Why can't law enforcement use a smart contract to try and drain the criminal's wallet?
Imagine seizing a Lambo and just driving around yourself, right? So it's actually a great example. And so you go all the way from seizure, right? We were also talking about custody. Maybe you can talk a bit more also about the custody part here.
Sure.
And like, what do governments even do when they hold assets? Do they stake them probably, or is that even a question right now, right? So
Yeah, it's a fascinating topic. And it's nice using maybe analogies that back to the kind of real non-crypto world for all of us. If you're the US government and you're storing dollars, you're not using JP Morgan to store your dollars. So why should you store your crypto with an exchange infrastructure? Ideally, what you want is you want to build your own custody infrastructure that you and only you control. And that's gradually what we're seeing governments starting to do now. So they're starting to leverage latest available technology, things like multi-party computation, although a lot of them, are still effectively stuck in the one key, one address, or even multi-sig. But they're now asking to have their own custody infrastructures built from scratch that are completely isolated from the rest of the world, that are super, super secure. And remember that the custody philosophy for a government is very different to a retail institutional exchange. It's got to be really fast on the way in. It's 2 a.m. Sunday morning. You need to quickly seize the asset, but really slow on the way out. You want the man in the clipboard going down to the nuclear bunker having to sign a transaction. That's what you want if you're a government. Now, I will hand over, I think, to tradias here, actually, Nils, for the staking question, because these guys are, if you want to basically maximize the value of the assets that you're selling and ensure that the victims are getting the best price using a buff and regulated best price execution that gives you a market conformity report, I can't think of better. But what do you think about staking, Nils?
One more, like Carmel wanted to say something.
Yeah, just quickly before we even get on to staking, I think from a private sector perspective and having been appointed over a number of exchanges, what you're saying about everything needing to slow down and indeed be segregated, and there are custodians in the room that I know that have gone to great efforts to understand what happens at the end of a company life cycle. I think in this sector we're all very focused on building and on what the case for the use cases and everything like that, but when things end in an orderly way, they still have to be dealt with properly. And a lot of my peers in the sector came to me quite a few years ago and they said, I know all this crypto stuff that you're doing. I've opened accounts with custodians. I'm ready to go as soon as I get my first crypto liquidation. It's going to be amazing. And then FTX went under. It's like, there might be liquidity risks. Keeping and if I have the assets of, let's say, Bittrex, where I'm appointed, and initially I was appointed over $100 million, $150 million worth of digital assets, 790 odd tokens, it had its own complications. If I were even able to, which I wouldn't have been, but if I had stuck those into FTX, and then that happened
On an omnibus wallet structure.
I could say goodbye to my house, to my career, because there are personal liabilities when I have these statutory court appointments. So I think things have moved on slightly, though, from everything needs to slow down and stop to, what do we do to protect against the volatility of the assets? Will you make the best decision using the information available to you? To actually, do we need to consider staking? Do we need to consider value propositions?
Yes, and now we get to the spicy part. Why did the German government why did you do everything right? Why did you do everything right?
Where do we start?
Yeah, where do we start? Right. There was so don't trust the news. That's like the.
Yeah, so I can't fully disclose everything that I would like to say, right? But I can give you like a glimpse of what happened there and why you should be aware of what you communicate. Yeah.
Come on, the doors are closed. We're all friends here.
They're a bit open.
Someone get Nils a beer.
Yeah.
All right. So I think everyone is familiar with the case that one of the German states secured 50,000 bitcoins at that time worth 2.7 billion euro. First question was, why are they so stupid and sell it? Why not hodl, right? They are basically not allowed to do it. When they seize assets, they are forced to liquidate these assets. And especially when it's an asset that can lose value, like this is a law in Germany that was made for fruits, for example, that they have to directly sell the fruits. But they say Bitcoin is so volatile that we have to directly sell it when we get it. It's called, the German word is emergency selling.
Wasting asset.
Notveräußerung. Yeah. That's the German word for that. So they had no choice. They had to sell it, right? How do you sell 50,000 Bitcoins? It's not so easy to sell 50,000 Bitcoins if you go to just to Kraken or to Bitstamp and just try to place an order there, you would crash the market, right? This is what they did not do. They came to us and we helped them because it's not only, by the way, the liquidation and the volume, it's also the whitelisting of the coins, right? This is another topic we should definitely talk about later. Coming back to the state, what they did one major mistake. In January 2024, they communicated in a press release that they seized these assets from Movie 2K. So what they didn't know is that the blockchain is fully transparent and everyone can see the public
they
addresses.
communicated the addresses publicly.
They communicated that they seized the assets from Movie 2K, but everyone knew
Important point.
that these addresses are the addresses from Movie 2K. So we had platforms like Arkham Intelligence and other platforms. They labeled these wallets as German government wallets. So there was already a focus on these wallets. And you were asking what happened then with the price. So the price went down something between 10 and 15%. But this was not because of the selling. It was just that the moment we moved the assets, the market thought they don't do it with experts or professionals. They do it on their own, and that means they crash. They crash the market, right? Second problem was at the same time FTX coins were sold as well, and I think there was a third case also in the US. So to be crystal clear, if we want to sell 50,000 bitcoins, we can sell them within like 1 or 2 days without moving the markets a penny, because we sold these coins over 95% OTC trades with guys from all over the world who are interested in buying.
So you
bitcoins,
wouldn't
right?
even see that on.
So you don't see these you don't see these transactions on the exchanges. There is no impact on the market because the guys or the companies and family offices who bought it, they actually they hold them until today, right? So it was the media, it was press, it was especially LinkedIn. So I was a little bit shocked what I read from so-called experts with thousands, 10,000s of followers.
He's
right?
not looking at me.
No, I'm not looking at you. But like people were like discussing, oh, now they are starting to buy back the bitcoins because they see the price is so low. There was like, we were just moving assets from different wallets to other wallets. Like we had an on-balance sheet wallet, an off-balance sheet wallet, so it makes sense in the evening to move the assets off-balance sheet, that when we go broke, the money is not gone for the state, right? So there were so many things that were misinterpreted. And that was so the reason why the Bitcoin dropped was unfortunately the news and what the market made out of it. The moment when we were selling the Bitcoins, no one
actually knew about it, right?
No one actually recognized
and
that.
it's
yes.
very,
so
it's
we
very
were selling in a rising market.
And I had this discussion with Nils before, because also market intelligence software wouldn't be able to tell you that, right? And there were a lot of trading bots involved. So I think like on these wallets, there were like 800,000 trading
Yeah,
bots.
insane. So that was another challenge because everybody was looking what we are doing and trying to find patterns. So they tried to make arbitrage out of it, right? So it's even for a trading house, a quite complex case when everyone knows that you want to sell 2.7 billion. That's not the best position, and you can where you can start doing such a transaction. But the main problem was the media and what people made out of it, because for the market it would have been a non-event in the end.
And so one very fun case, also like a practical example that we discussed about whitewashing, right? And the need for whitewashing. The German government seized assets and then liquidated them and basically sold them to the public, right? A guy acquired the Bitcoin out of that, like fraud case, I think it was. Anyways, 24 hours after he had acquired the Bitcoin, police suddenly knocked at his door and was like, yeah, we found the fourth guy.
Yeah, it was correct. That was a couple of years ago. It was an auction. At that time, the states sold their Bitcoin via an auction, because they say, okay, when I find a Lambo or when I find a painting, I sell it in an auction. So why not selling the Bitcoin in an auction? I mean, auction makes sense for illiquid products, not for hyperliquid products that have a price tag 24/7. So first thing what happened is the buyer actually bought the Bitcoin, I think 10% over market price. So he was already a little bit unsatisfied, let's say. Then it took 2 weeks.
But he was satisfied because it was like he expected it to be a virgin coin.
Yeah,
so
right,
basically something
right,
like
right.
where he said he received that from the government, so it has a clear history.
So
right?
exactly. And 2 weeks later, he got a piece of paper with a private key on it. So 2 weeks later, he was able to sell the Bitcoin. I think the Bitcoin dropped another 10 or 15%. So he was really angry. And he said, oh man, I just put it on Kraken and I drop it and that's it, right? And then he put it on Kraken, he sold it, his account was completely frozen then, and a couple of hours later the police was in front of his door because they thought he was the fourth guy from the case that they were searching for, because he was owning the asset. And he said, guys, I bought it from your state, right? What's wrong with you? So that shows, or that showed the states that there is something they have to do when they want to liquidate cryptocurrencies. And this is the so-called white listing, or if you want to say it, whitewashing of cryptocurrencies. So they came to us and asked us if we can help. So we invented a process that we are able to clean these confiscated cryptocurrencies. It's not like that the Bitcoin is or has a mark on the blockchain that says, oh, this is from drug business. It's like players like TRM and chain analyzers, etc., who do these on-chain AML services and say, okay, these coins are coming from Russia and North Korea. These coins are coming from drug dealing, from darknet, etc. And together with these partners, we invented a process where we can guarantee that when countries or states or governments want to sell cryptocurrencies, that people who buy it don't get in trouble or problems, that they buy like a clean Bitcoin.
Yeah, I mean, that's something super important, right?
I mean, thank you, analytics companies, because you make my compliance team so happy. I mean, honestly, thank you.
Janela's is here as well, right? So, well,
It's no joke, actually. I mean, I'm just after completing a distribution process and a liquidation, and we've relied very heavily on analytics companies because they're, the company itself, its compliance was very good, unlike Cryptopia, where we had 900,000 creditors and 400,000 of them claimed to be in Vanuatu because you only needed an email address to open the account. I mean, how do I pay those assets back? It's just, people have to dox themselves. But on this one, it was a very compliant exchange. We had all of the information, we had all of the data. But if I'm distributing in specie, which I was, I need to make sure there isn't a sanctions risk. And frankly, we used everyone that is listed back here. We used, lots of people that were in the room. We had 4 different systems that we were using that had different overlapping compliance capabilities. Because again, it is my house on the line, or it's my professional reputation on the line, the professional reputation of my firm. And OFAC and the various OFSI sanctions enforcement people are really gearing up now in terms of self-reporting. So when it comes to sanctions, when it comes to paying out and not submitting your SAR or your DAML and all of those kinds of things, it is the analytics company and it is the likes of Tradias who can do the whitewashing of the accounts that really helps us get the job done and get those tokens back in circulation and keep the economy moving. Right?
By the way, we only do it for governments. We don't do it for private parties.
Yeah. We'll chat later.
Niels is a great washing.
so.
Okay, great washing machine. So, Q&A. Are there questions from the audience?
So this Benedict? Yeah. Benedict from Crystal, one of the blockchain analytics companies. Question for Tradias. Has the German state in its entirety learned during the time that you helped them what would happen with an asset seizure and the liquidation today versus when the 50,000 Bitcoin happened?
That's a very good question. I would say that starts, first of all, with not having the crypto on a ledger or just having 24 words and think it's already seized. So they have now a countrywide custody solution, proprietary built for themselves. So it's more professional now. We don't have to do, or also the BKA doesn't have to do that much education anymore. Most of the Landeskriminalämter, so the state polices, or also the attorneys, they know now what they have to do and what they are talking about. They definitely learned that you should not talk about such a case before the case is completely closed and liquidated. So that's what they also learned. And they understood that they just cannot like sell it on platforms. There is a Bitcoin platform in Germany. It's called bitcoin.de. It's very old. It exists like 2013 or 2014. Before that, they just used that to sell the Bitcoins there. So there was no whitewashing, nothing. So it became more and more professional. And please do not underestimate these organizations. They really know how to use AI, and they know how to with whom to collaborate with the chain analyzers, the TRMs of this world, right? So they are very, very sophisticated, and they are really trying to educate now as well the tax investigators, the local polices. So they really want to find a way to find more crypto. So they expect to find or to seize cryptocurrencies 10 times of the amount what they found last year. They expect to find that this year. So it's a really scaling model for them.
But don't you think it needs legislative change, Nils? Because I've heard your story more than once now, and it's an amazing story. I enjoy it every time. But the thing that really strikes me is the fact that there was no discretion to hold on to the assets until such a time as to sell it. So if I'm appointed proceeds of crime receiver in a crime, like a criminal-driven matter, I don't have to realize all of the assets straight away, whether it's property, whether it's Lambos, and all of these things I've been appointed over, cash and crypto, but I've got the discretion to decide when, because my duty is to maintain the value or to realize them, but I've got the discretion to liquidate things when I think it's right.
Okay, but a question back to you. What should be a reason why they should not directly liquidate it? The only reason could be to say because they speculate on the price, and they are not allowed to speculate on that price, right?
There's different models around the world.
Exactly.
I mean, so for example, the Dutch model and the New Zealand model is to sell immediately upon seizure, because they recognize that they, as law enforcement, it's not their responsibility to speculate whether the price is going to go up or down. And ultimately, it's a lose-lose situation for them. If they sell today and it went up, oh, idiots, law enforcement shouldn't have sold. If they sell today and it goes down, no one says, congratulations, law enforcement, you did a great job. Whatever happens, they lose. But the discretion, I think, is where it becomes a bit more interesting around volatility and depreciating assets. Some types of digital assets are not as volatile anymore. And they used to be considered very, very volatile, but they're not as volatile anymore.
Absolutely, and it also depends on the underlying case, right? So, for example, in the case of Movie 2K, the assets were actually provided by the suspect of the court trial, right?
That's correct.
There was an approval from that side as well. So the question is also who should benefit from that, because ultimately it's taxpayer money, right? So,
but it's a good
talking
point.
about tax administrations. I mean, like, honestly, working with financial crime units, law enforcement bodies, and then also tax administrations, we see that the levels of sophistications, not just around countries, but also within divisions, vary significantly. And what we see on a global scale is the tax administrations just are very under budgeted and historic, like in many countries, like in Germany, are still using facsimiles. So it's there's quite a lot of struggles there as well.
But one more point. So they are not interested in finding the best moment for the best price to sell it.
Exactly.
For them, it's to find a way to sell the asset without moving the markets. So selling it in a market-friendly way. This is the most important thing for them. And this is why the sell-off, we didn't do it in 2 days. I think it was something around 3.5 weeks. So we really wanted to be on the safe side, even if it were like over 95% OTC deals or OTC transactions. We really kept it slow. And this is the most important point for them. That's what they really care about.
I think, Ari, maybe one last thing, because this has been big in the news as well, and something that I wanted to ask you is, I mean, we see a lot of money laundering happening at the moment, a TED on Tron, right? I think it's like there's numbers out there like 70%. We know of T3. It's been, you just had another very, very big seizure. Maybe you can give some background there?
Yeah, no, happy to. We put out a report, I don't know, a year or so ago that said about 50% of all illicit activity at the time was occurring in Tether on the Tron blockchain. Ultimately, that led to a partnership that we call T3. It's Tether, Tron, and TRM. It's a financial crime unit. We have someone dedicated full-time who's only investigating cases involving Tether on Tron. We work closely with Tether's compliance team to go out and block, seize assets, working closely with law enforcement. And I think to Max's question, it's when we're thinking about what we could do as an industry, sort of working closely with law enforcement, it's a pretty good model. And sort of like the way I started out, I think today, talking about leveraging the technology, right? This open, immutable public ledger that we're now able to investigate financial crime on. This is an example of something that we can do, sure, certainly with the help of law enforcement, but it's definitely something that we could do as an industry to sort of take on some of these financial crime issues ourselves. As you all know, we've all put out reports that say essentially illicit activity makes up about under 1% of all activity within the crypto ecosystem. It's a tiny percentage compared to the lawful activity that's happening, but that 1% is pretty existential when you think about, the Bybit hack, 1.5 billion, when you think about people losing their life savings. And I think that T3 is a great example of how to leverage public-private partnerships. This group today is a great example of how you can work closely with the public sector to go after bad actors. So, no, thanks for the question. And I think the idea of public-private partnerships in this space is constantly evolving. And I don't know, PPPs is like one of those things that my eyes have always rolled back in my head when people talk about, because I think it's mostly talk and very little action. And in the first 7 months of this one, we've seized about 150 million, including 8 million in the Bybit hack. So, we'll see where it goes. We'll see if we can get those numbers considerably down on Tron. But, early days, pretty successful.
And that's very, very great to see. Any further questions?
Yes.
Yes. Hi, my name is Laurence from PayPal. I think I have a question for Ari. I would be curious to know, when we think about fraudster, when they steal crypto asset, what is the trend? Are they trying to keep the asset on chain, or they try to get them off chain? And do you see a trend in the behavior?
Sure. I would say that bad actors are almost always trying to get the funds off chain. And the reality is that hopefully we can ask our friends over at Paris Blockchain Week, there will be a world someday where transactions occur entirely on chain. But that world doesn't exist today. And bad actors, like the rest of us, really can't use crypto to buy much. So they want to move those funds as quickly as possible to off-ramps, essentially exchanges where there's enough liquidity to off-ramp them. And that means whether it's, large exchanges like Binance and Coinbase and others, whether that means they're a network of OTC brokers in China that launder funds for North Korea. So it is a cat and mouse game today between law enforcement, using tools, working with partners to follow funds to an exchange. The bad guys are trying to off-ramp them. Law enforcement is trying to block them. And that's primarily still what you're seeing today. I have for years now said we're moving towards a world where we're transacting entirely on chain in DeFi and beyond. That day is not here, in my humble opinion.
I think we're actually seeing the opposite. So from a kind of seizure perspective, very few seizures happen on hardware or software wallets anymore. Seizures are mostly at centralized custodial platforms. That's where bad guys are keeping their funds. I mean, if you're a bad guy and it's so easy in a sense to kind of launder funds through centralized exchanges, why would you bother holding your own keys? Why would you go through the hassle of yourself having to have your own hardware and your own software wallet when you can just bounce around from centralized exchange very, very quickly and do your money laundering through them? That's my fear at the moment, is some of the big kind of policy direction, I guess, that the US is going by, opening up crypto to banks, for example. That terrifies me. I mean, compliance teams struggle today with trade-based money laundering. How are they going to deal with crypto? And that's the thing that really, really terrifies me from a state of the art against financial crime, I guess.
I would say that things have improved, though, dramatically at centralized exchanges in the last few years in terms of cooperation and collaboration. 3, 4, 5 years ago, I was at a conference and it was on crypto and disputes. And a GC for one of the big exchanges, which remains a big exchange, somewhat wildly stood up in a room and said, adhering to freezing orders and disclosure orders, it's difficult and it's expensive. And the session had an English High Court judge giving this, and he did point out, well, you are obliged to, you are an unknowing facilitator of fraud. And that was at a time when you were knocking on closed doors trying to, and law enforcement was ahead of the game in comparison to the civil recovery process. But nowadays, those same exchanges, I'm phoning them up. I'm crafting orders for disclosure with them so that they have, it's a gateway. It's not an adversarial process. It's much more collaborative, and their teams are much more familiar with the process, and they understand what we're trying to achieve.
Yeah, I mean, I know there's been a lot of progress. I'm sorry, I just have to take the opposing view. I mean, even just last week, we had a case. I think they're doing a great job for fiat on and off ramps. That's where they're focusing all of the compliance effort. But if you go there and you deposit some Bitcoin and you convert it to USDT and you take it out, you don't see anywhere near as many checks. I mean, just last week we had one where brand new account, basically a mule with an email address, deposited 20 million, converted in and out within a day, no question.
Yeah,
That's
with a big
happening.
exchange.
But it will change because someone is going to end up on the hook for that. There's a case in the UK where it was a Thai exchange actually was found to have ignored the red flags that systems it was using like TRM or Chain were flagging that it was illicit transactions. And the fact that they ignored it very nearly lost them the case and very nearly got them a substantial financial penalty. And until that happens in a court of law, then that's going to continue, Hugo. I don't disagree.
And this is what we're seeing internationally, right? Is that now exchanges actually will be required through all of these information reporting requirements to report this transaction data to their local administrations,
and if they
right?
don't, it's going to hit them in the pocket, right?
Exactly. So basically, also from the off-chain side, there will be a lot of data that's coming in to the administrations. And for example, under DAC 8 in Europe, this data can also be used for financial crime investigations, right? Straight away, there is permission for that. So, and you have Brazil that has implemented transaction-based information reporting on a monthly basis. So basically, the administrations will receive a lot of data also from the off-chain side. This will, of course, because of the compliance requirements that go hand in hand with that and are not easy to comply with, right? Go hand in hand with a consolidation of the market. So I agree that the exchanges are improving, but it's also because the number of exchanges is decreasing. So maybe and this is a good point, I think, where to wrap it up. I feel like we had a very, very good discussion showing like where do we stand right now if we look 3 years in the future, because 3 years is already very far out, right? What do you see change? Maybe one.
Yeah, I'll go 3 minutes in the future. And I actually think the future is here today. Everything that we talked about today in this conversation is going to be supercharged or is being supercharged by AI. And scammers now don't need the human trafficked victims, right? The scammers. They can use AI agents at scale. Ransomware actors don't need real affiliates. They can use AI agent affiliates, right? Launderers are able to move money programmatically faster than they ever could before. But we're also leveraging tools, TRM, law enforcement, and to combat this type of activity. But financial institutions, to the last question, are going to have to implement AI into their workflows. It is going to absolutely be everything. So this is not a 3-year thing. This is like a 3 minutes ago thing. But this is absolutely the future of all of this.
Hugo?
I mean, I couldn't put it better. Thank you. Honestly, I think the way you framed it is perfect. I will just reiterate what I said earlier, which is banks taking crypto terrifies me for money laundering.
Carmel?
I think things are going to continue to develop apace. I have to say, having worked for 20 years in fraud investigation and asset recovery, I've seen nothing like the digital asset space for investment in tools like TRM Labs and in the investigative tools. And I'm impressed by that, and I'm proud of it, because in all other spheres of fraud, I see law enforcement chasing badly. So I think this will end up being hopefully one of the sectors where there are a lot more good stories than there are negative stories. I do worry, and I'll finish really quickly, that there'll be a bit of a split between non-compliant exchanges and other services that facilitate fraud. That's already happening, and I think that will get a lot clearer, and it will mean that for those of us in this panel, our jobs will probably be quite hard and a lot harder than they are now, because no one will be touching the compliant services for off-ramping or for laundering purposes.
Nils?
I would say better pay your crypto taxes, because in 3 years, from now, so they now have all the data from the exchanges. The state needed, or the government needed, for one case, an average 4 hours to investigate and come to a conclusion. As of today, they only need 2 seconds for one case, so they came down from 4 hours to 2 seconds. So I think the state will make a lot of money with not paid taxes, and this will be a bigger topic in the next years, I guess.
I can only agree there. No, it's 2 seconds, because basically you have data reconciliation, right? In tax, you either have compliance or non-compliance. And it's always a box you need to tick. Did I pay taxes, yes or no? And so if you get information about an individual that traded before, tax transparency is anywhere between 0 and 10% in most jurisdictions. You have a case of clear non-compliance straight away. That triggers.
So if you have an account, if you had an account, a Binance account in 2014, and you moved in 2020 to Dubai, it's quite realistic that they will check on you first. Yes.
Yeah. So I agree. My hypothesis for in 3 years from now is that while more than 90% of criminal investigations are currently triggered by on-chain behavior, that the majority of cases in 2 or 3 years times from now, in financial crime and criminal investigations, will be triggered by off-chain data that was received via CAR for dark age reporting. Thank you very much for this outstanding panel.